All around the world, large established companies are worried about being disrupted by startups. Company executives who cling too tightly to their traditional business models and practices are finding themselves at risk of being left behind. This concern is no different for the insurance industry. InsurTech startups sought to make the task of insurance shopping just like any other online service that provides simplicity, transparency, and convenience to customers. As part of the digital transformation in the insurance industry, the global InsurTech market is expected to grow significantly to generate almost $160 billion by 2030, growing at a compound annual growth rate of 32.70%, according to reports by Allied Market Research.
With so much digital convenience at a consumer's fingertips, provided by companies such as Amazon, Uber, and Airbnb, it's no wonder that their frustration for the slow, inflexible, and bureaucratic processes of insurance companies are an all-time high. The insurance industry has practiced the same way for nearly a century, failing to evolve a stagnant market that has alienated young consumers.
In 2013, only 1 in 10 millennials held some kind of insurance policy. A large reason for this was that millennials tended to avoid acquiring services that required complex and cumbersome face-to-face interactions with traditional salespeople or brokers. This trend remains true today. This large and neglected demand led to the rise of InsurTech. Trove was among the first InsurTech startups to offer on-demand micro-duration insurance direct to consumers. Through Trove's app, insurance could be activated with a swipe of a finger and deactivated once coverage was no longer needed. Scott Walchek, co-founder and CEO of Trove, noticed that emerging consumer behaviors centered around a new on-demand economy, people getting what they wanted whenever and wherever they wanted, conveniently engaged on connected devices.
Trove was born as an attempt to make insurance easier, faster, and cheaper to acquire. As an example, an individual could insure a valuable camera for the duration of a photography trip. According to a Harvard Business School case that Thales Teixeira, Sami Dana, and I co-author on Trove, the company achieved decoupling by offering insurance on demand. Using the mobile app, consumers no longer needed to execute the initial steps of comparing policies, requesting quotes, and enduring the tedious bureaucratic process of obtaining an insurance policy.
Despite the innovative InsurTech companies that have disrupted the traditional insurance industry, it is not too late for large, traditionally established insurance companies to keep up with this digital era. For example, Ping An is a Chinese insurance and financial services conglomerate. As one of the largest insurance companies in the world, it is in more than 40 different businesses, among them health, life and property insurance, real estate, investment banking, and other financial services. The company invested heavily in new technologies and launched an array of spin-offs that operate far beyond the boundaries of its traditional business. In 2013, Peter Ma, the founder and chairman of Ping An, anticipated the trend for cloud computing and began to prepare the company by building its own cloud, which allowed Ping An to develop advanced data analytics across businesses, an essential element to become a customer-centric company. By 2019, Ping An Insurance was no longer a financial institution. Instead, it had become a Finance Plus technology and a Finance Plus ecosystem company, with 5 industry verticals around the key facets of consumers' lives: financial services, healthcare, automobiles, real estate, and smart cities. It had incubated companies in all verticals and used various technologies and new business models to empower those companies.
I visited Ping An's headquarters in Shanghai a few years ago. What I learned during that visit is that it is indeed possible for large traditional businesses to innovate. But in order to do so, they need to abandon what has worked well for them in the past. And one of these things is abandoning a financial firm-centric approach in favor of a more customer-centric mindset of innovation.
The digital consultancy Decoupling.co has written more than 30 Harvard case studies which dive deeply into how startups are disrupting established companies and how they have successfully responded to these threats. We help B2B and B2C companies design their own disruptive startups. We also help companies implement customer-centric innovation and new business models. To learn more, visit decoupling.co.